Whether your long-term goal is to run acquisitions at a major private equity firm, to manage a portfolio of 100 properties or more, or to go out on your own and start your own real estate investment or brokerage firm, the path to get there almost always starts at the analyst level. A real estate analyst role is the entryway into some of the most coveted jobs in commercial real estate and is also a great training ground for entrepreneurship. And even though we talk a lot about how to land a job in commercial real estate on this channel, I think it's also worth taking a deeper dive into how to actually succeed and stand out when you do land an analyst role and what it takes to be successful in one of these positions. And just like in any job, there are levels of analysts out there in the field, and the quicker you start taking actions that put you at the top of that range, the more quickly you're going to be promoted within your firm or have the opportunity to take a leap into a leadership position at a different company in the industry. And in this video, to help you take that next step, what I wanted to do is walk through 3 things you can start doing right now to become that top level real estate analyst outside of just improving your Excel and Argus skill sets, and how you can significantly accelerate your career path up to the manager, director, or VP level in short order. So most real estate analyst job descriptions look pretty similar, with a focus on finding someone with strong Excel and financial modeling skill sets, an understanding of real estate finance, and potentially even an advanced Argus skill set for office, industrial, or retail focused positions. But for most of you watching this channel, an analyst position is just a starting point and not the end goal. And to move up in this industry faster than your peer group, it's going to take more than just strong Excel and Argus skills in order to make that happen. And to be a great real estate analyst, or one that gets promoted quickly, there are a few key things that I've found that will help you a lot in making that happen to get to the point where you actually have an analyst and you can get out of the weeds and start the next phase of your real estate career, where you can focus on managing properties, landing clients, or closing on new real estate deals. So number 1 on this list, and really the only technical point I'll make in this entire video, is to focus your analysis on looking for patterns and also breaks in those patterns. As an analyst, you are not being hired just to do glorified data entry, and if you go into a role with this kind of mentality, you're probably going to be replaced by a human or even software very, very quickly. A great analyst reviews historical and current financials and looks for patterns in the data, trying to find information that can paint the picture of both what has happened at the property in the past and what might happen at the property in the future. This includes looking at trends in operating revenues, vacancy numbers, bad debt, operating expenses, and even capital items like major renovation costs, including exactly how much money was spent on each item and when these costs were incurred. I like to think about this part of the analysis as trying to turn numbers into a story, with the goal being to clearly understand where the property is headed and where there might be opportunities for improvement if I'm working for a principal side firm, or where I can maximize value for a client if I'm working at a brokerage shop. For example, this might include things like taking stock of annual base rent increases over the last 3 years at the property, tracking occupancy figures during a renovation by the seller or previous owner, or finding the average operating expenses for the property that are incurred on a monthly or annual basis and what your company might expect to incur as an owner of the deal. This also means looking for abnormalities in the data, which includes things like looking for any major spikes in operating expenses during a certain month or season, trying to find any higher than average operating expenses that could indicate the need for a major replacement or capital cost, or even a major uptick in rents in the 3 to 6 months leading up to the property being put on the market, but an equally big spike in concessions or free rent during this time. The goal here is to be able to find the items that need to be explored further and the items that need more explanation from a broker or seller in order to understand the complete picture of the property and how that property might perform going forward. Now, aside from becoming a top-level analyst from a purely technical perspective, the next thing to do to move to the top of the analyst pack is to think like an owner of the business that you're working for rather than just as an employee. In an analyst role, you'll make your best decisions by tying your actions back to how your analysis can directly help your company either increase revenue, decrease expenses, or decrease exposure to risk, rather than just trying to find ways to complete a task in the shortest amount of time possible. If you're working on the principal side in acquisitions, this means asking yourself what you can do to maximize risk-adjusted returns, how you can present a deal more favorably to investors, or how you can limit your potential downside on a deal you're looking to acquire. And if you're working in investment sales, this means putting the time and effort in to BOVs and offering memorandums to showcase your company as the best team to take the deal to market, taking the time to build rapport with clients to build repeat business, and searching for hidden upside in deals you're underwriting to maximize pricing in the market. If you can take a step back and think about the actions you would want someone to take in your position if you were simply an owner of the company, this will give you an extremely helpful perspective into your own work and will allow you to develop the kind of thought process that most senior people at your firm go through to make decisions on a day-to-day basis. As part of this, a great real estate analyst also anticipates comments and questions their direct manager may have when submitting an analysis for review, and a great analyst is proactive in addressing those concerns even before the initial presentation is submitted. If you were to take a high-level look at your model or whatever your deliverable is there anything that doesn't make sense or doesn't add up, and do you have any questions left outstanding? And if the answer is yes to either of these questions, your goal should be either to find the answers on your own and address these items, or to raise these issues during your presentation so you and your manager can tackle these issues together. In a video I made a few weeks ago, I mentioned Steven Schwartzman, the CEO of Blackstone, and I talked about his advice to come at the interview process as an equal, not as a supplicant, and this is also very applicable even after you've gotten your foot in the door at a firm. Instead, what I recommend is treating your direct supervisor as a teammate or someone you're working side by side with to achieve a common mission, whether that's finding a profitable acquisition opportunity, maximizing pricing for a brokerage client, or putting up a banner year in loan production if you're working on the debt side. Yes, this person may have 10, 20, or even 30 years of experience on you, but even at the analyst level, you still play a huge part in this process of making sure that the team is successful. And with that, if you come at your work from the perspective of someone who is contributing towards the achievement of a common goal, you're going to be taken more seriously at work, and you're also going to be seen as someone who is critical to the success of the organization very, very quickly. And then finally, aside from identifying patterns and thinking like an owner, the biggest thing that's going to help you advance ahead of your peer group in the analyst position is to, when you're ready, start playing at the next level even before you're asked to. If you're underwriting 5 to 10 deals per week, start keeping track of guidance you're given by your manager on things like operating expense assumptions, releasing assumptions, or rent growth assumptions, and try to build up a database to the point where you don't need to ask for input on every little detail you add to your real estate financial model. This is another component of acting as an equal and building trust by clearly showing to your boss that you're stepping up and taking accountability for the underwriting process rather than just waiting for direction on every move you take. And if you want to be promoted, at a certain point you actually need to be able to do this, since at the next level you are going to be the one responsible for giving guidance to your own analysts, and you won't have those same training wheels that you had at the last level. Playing at the next level also means going from a cost center at your company to a revenue driver in the business, essentially doing the work that would be required of you at the next level without actually formally being in that position just yet. If you're an acquisitions analyst, this means building relationships with your peers in brokerage to source off-market deals, or taking the lead on due diligence and closing to get a deal across the finish line. And if you're in brokerage, this means taking ownership over the direction of a BOV or offering memorandum, or starting to build your own client relationships in order to win new business for the firm. It's one thing to sit down with your manager at the end of the year and ask for a raise because you think you performed well on your role, but it's a completely different conversation to come in asking for a raise or promotion if you brought in hundreds of thousands of dollars through acquisition fees or commissions throughout the year. And even if you do this and your manager still doesn't see the value you bring to the table, and you know you're being underpaid or can't break past a certain glass ceiling within your current firm, you'll still have everything you need to be able to say, I'm ready and I've done this before, when you're applying for next level positions at other firms in the industry. Overall, there is a lot of variation in the skill sets of real estate analysts, and with that, there's also a significant amount of variation in the level of respect, pay, and the rate of career progression that analysts in the industry can demand depending on where they fall on that spectrum. And to be a great analyst and outshine your peers, if you can spot patterns, think like an owner, and play at the next level even before you're asked to, you're going to be in great shape to be that guy or girl that's tapped on the shoulder when a leadership position finally does come up. And if you're looking to go from good analyst to great analyst, or just trying to get your first shot at an analyst role in the real estate industry, make sure to check out our all-in-one membership training platform, Break Into CRE Academy. A membership to the Academy will give you instant access to all Break Into CRE courses on real estate financial modeling and analysis. You'll get access to hundreds of practice Excel interview exam questions, sample acquisition case studies, downloadable acquisition, development, and waterfall models for multifamily, office, industrial, and retail deals. And you'll also get access to members-only private email-based career coaching if you're looking to break into the real estate industry and want some personalized guided feedback along the way. And if you like this video and want to see more videos like this on commercial real estate career advice, make sure to hit the like button to let me know. And if you're watching this as a hiring manager or even an experienced analyst, let me know in the comments what you've seen stand out when it comes to people who really excel at this level in the field. As always, thanks so much for watching, guys. I hope you found this helpful. Subscribe to the channel if you haven't already to see more videos like this every single week, and I'll see you in the next video.